Hi, this is Mike Morton. I'm with Mike Ray and Todd Johnson. This is our first podcast for DividendLab, the Platinum Select, and the private group. And we're going to just introduce what our ideas are on the new podcast, what we're going to cover.
Hi, Mike. Thank you very much. This is Todd Johnson, and I am very excited about this, working with the team that we have, and everybody should expect some great results with our portfolio and some hedging, some income stocks, some capital appreciation stocks, and it's just going to be a lot of fun. And every week will be new information, new ideas, and the whole goal of the podcast is to keep the reader and the listener, folks that hear us on the radio stations across the country, and get the newsletter to be aware of key issues, key worries, key opportunities that we may have, and just keep everybody engaged in a fun, informative, factual, money-making fashion. And that's my goal and the team's goal for the podcast. It'll be done weekly, and I will give it back to Mike Ray, a key writer on various trades that we do in other venues. And I'd like to hear what Mike has for his thoughts on the podcast going forward.
Hi, this is Mike Ray. Very excited to be in the podcast. Very excited to be with Dividend Lab and the various groups underneath. Looking forward to yet another dynamic medium that we can exchange ideas on. I know it gets very boring to just read, endless pages of financial stuff. So hopefully we can make it a little more energetic, a little more exciting for you all, and get some key information out on a timely basis and make everyone a winner. So with that, why don't we go ahead and talk about the market this week, Todd? This week was pretty rough. Actually, last week was too. We saw some major moves up, major moves down the market. What do you have any thoughts on that?
I really don't. And here's why. I don't look at the market week by week, and most of our positions are either hedged or we own exchange traded funds, closed-ended funds that won't move up or down with the hysteria of CNBC or the Wall Street Journal or the mainstream media. God bless you, Jim Cramer. But we're really focused upon just a day-by-day positioning portfolios, making money, hedging, learning, admitting mistakes, learning from those, and improving over time.
I think in the last couple of weeks, or actually in the last couple of months, we've seen the market, really heated up. I've seen, especially in the last couple of weeks, pundit after pundit and people after people saying how overbought the market was. I think especially this last week, what you're seeing, we had, situations coming up. We had a problem in Turkey. We had a problem in Brazil. We had, Chinese manufacturing and then European inflation. And all these stories came together. Now, did any of these stories bring in themselves bring the market to its knees? I don't think so. I think the market was really just looking for a reason to sell off. So, we've sold off pretty good in the last, week or two. And now we're going to get these numbers on Friday. What are these numbers going to say? I don't know. I can't tell you. I don't know. If I could tell you that, then I wouldn't. I'd be a multi-trillionaire. But do I think there's more downside coming? I probably do. Could I tell you that there's going to be a bigger, like a 10%, a 20, 30% move? I can't tell you that. But I mean, that's the reason we hedge. I mean, that's why we're here. We're not just buying stocks and just hoping they go up and grow to the sky. We know that what's going to happen is we got to hedge. And so, I'm not sure I'm really ready to answer that question right off the bat, but that's what I got.
And Mike, just to follow up on that, for everyone that listens and reads us, the core hedging strategies that we do are having, whether it's the EEM puts, the SPY 500 puts, inverse funds such as symbol SDS that moves twice as much as the SPY. So if we believe on a short-term acute 1-week basis, we can buy the SDS for a short-term trade that will move twice as much in volatility upward as the SPY 500 moves down. The SDS will move twice as much. Now there are some 3x and 4x inverse trades, and I typically don't use those in any core portfolios. But the labor market, if it continues to weaken on this Friday, I expect the 10-year Treasury bond to continue to lower from 2.66 to maybe a weekly bottom of 2.45%. And with that being said, I would expect some of our income producers, whether it's ARP, ATLS, ETEE, to outperform as the interest rates are decreasing. And that's kind of the strategy that we're using. Now, that isn't a trade, but that's just what the expectations are for the week. And going forward, we will always adjust the positions to what reality happens. Fear sells, and the Wall Street Journal, CNBC, Kramer will always, address the fear mongering, and I would prefer not to, because the numbers on Friday could be positive, and in that case, all the fear worrying does nothing. So we have a long-term focused portfolio. It's hedged. We're selling covered calls, and our short-term hedges, protective puts, will rotate those out as the time duration expires. So, I'm very confident in our portfolio as it is right now.
Yeah, I actually agree, Todd. I think one of the things that's most important for people out there, especially, all the subscribers, is to really focus on that hedging. No other newsletter that I've ever seen, or people, brokers I've ever spoken to, they don't talk about hedging. Everyone just wants to be long, and no one wants to hedge. And, I understand when you look at your, investments at the end of the year and you do a lot of hedging, well, you accumulate a lot of losses. But it's something that you just have to do. So I mean, the hedging is one of the most important things you're going to be able to do for your portfolio. It's just what has to be done.
Thanks, Mike. And just to highlight one issue because you did mention Brazil and Turkey and the emerging markets, establishing a bearish position in EEM, which is the emerging market index, might be a trade, and there's a lot of premium built into it right now. So having a vertical spread may be the best choice. Whether that's buying a March $38 put and selling a $34 put for the net debit. Selling that $34 put still reduces the net expense of the trade. And one other topic that you mentioned was the losses on the hedging. The goal being that we can sell short-term covered calls on a lot of our positions to, reduce, not 100%, but to reduce to a great degree the hedging expenses. And I think I speak for everybody when our hedging strategies are more focused upon buying the hedges when it's cheap, buying the car insurance before the car accident, and then also selling covered calls when clowns and balloons and all the pretty people are out Britney Spears and all the glories of happiness, when they're present, that's the time to be selling covered calls because fear is not in the air. And that's just kind of a brief hedging strategy and also a way to generate income to reduce the hedging expenses.
I agree. I agree. That's well said. That's well said. Todd, let's move into the some key equities and some of the holdings that the group has. And one I know that we've talked about, but I don't think really enough can be said, would probably be ETJ. I mean, it's one of our bigger holdings. I think it's one of our most important holdings. We're talking about a fund here that's, well, at least when I looked at it last time on Friday, I think our premium or our discount actually is like 9.5%.
Wow!
Well, yeah, that's what it is. So, and we've had a pretty good run at it. I think our share price right now is around 11.28. And if I remember correctly, the distribution rate runs somewhere close to about 10%. Do you?
Yeah, Mike, that's a 9.88. I'm just taking a quick glance at it. And yeah, I happen to love the name. I only love the name when Philip Goldstein is involved. And anybody can check on the performance of ETJ, that's the Eaton Vance tax advantaged fund. And the fund, the close-end fund as it is, in 2008, it was slightly up as the S&P 500 was down 37%. So it's a good quality holding, paying a monthly distribution, and the annual yield, like you said, is 10%. Annualized with dividends reinvested will range between 17 and 21% net return. Now, going back before Philip Goldstein's involvement and his activism, the returns were not good, and he has brought his activism and his conviction to provoke the close-end fund managers, the Eaton Vance Group, to do something to unlock the value so that investors are not buying $1 for 90 cents. He wants the $1 to be equal to $1. And so with his involvement and a rights offering that may allow current ETJ holders to sell their shares of ETJ, slightly narrow discount to net asset value, that really is a great opportunity, and that will play out in the next few months. And just a brief overview on the fund, because it is an alternative fund that operates 100% differently than most funds. It sells covered calls and buys protective puts. And so in strong markets, it will not thrive like an EXG or a very bullish levered close-end fund or exchange-traded fund. And so that's the benefit of owning ETJ at present time is we get Philip Goldstein and we get buying $1 for 90 cents, and in the meantime we get an annualized return of around approaching 20% in a market that is very active, and up and down swings are becoming commonplace.
Yeah, I agree. I've talked to Mr. Goldstein as well, specifically about ETJ on a couple interviews a while ago.
What kind of person is he?
Well, he's an intense individual. I like him a lot. He's very personable though. A real nice guy that I thought. But yeah, he's really involved. They don't name his fund Bulldog for nothing. Bulldog doesn't usually bites and it doesn't let go, and that's what Mr. Goldstein's kind of done with ETJ. At least that was the sense I got.
Good point. I would not pet a bulldog.
No. So, other than another thing about that fund, really fits well into kind of what we're trying to do. It has these built-in puts. It's selling the covered calls. It's hedged. I'm looking at the names today, well, at least as the names I see that are sitting on, their number one holding: Google, Apple, Amazon, J.P. Morgan, Boeing, Monsanto. These are, they're not holding, fly-by-night little companies. These are big companies, well thought out, trades. I like what I see with ETJ. I know we talk about it a lot and we harp on it, but it's almost a must. I really like the way that the fund's operated.
I agree. Thanks, Mike. And I appreciate the insights that you share with Mr. Goldstein, dynamite character.
I guess let's move up. Upcoming trades, ideas that might be coming out that we're researching is always a hot topic. I'm sure people want to know about.
Well, before we get to that, Mike, do we want to hit some of the other ideas that Mike brought up and created? I think we've got off topic on Philip Goldstein, and I just wanted to pick your mind first because you've spoken to him a few times, and I appreciate that. But if we could go back to what Mike initiated the conversation with, and where this podcast is going and what we're going to be doing. And one thing that I would like to say is that the team that we have, there's various people involved, and for right now I'll just keep it to the people present so that the others can present themselves and mention who they are at the right time. But how I envision, and speaking with everyone, how we envision this project going forward, the podcast will eventually become a webcast or a video cast rather, where the reader or the viewer can watch us talk and discuss the ideas and make it a little bit more fun to see who's saying what. And so I'm really excited about that, and to learn more about some of these technologies that can bring verbal and thought-provoking money-making ideas and hedging ideas together. Just make it a great experience for the subscriber and for the casual investor.
I agree. This is going to be a little bit different than you've ever seen come from an investing newsletter before. You can watch a lot of dry stuff all across the internet, all across television, and I think these podcasts coming out weekly, we're going to have a lot of fun making them, and I think we're going to have a lot of fun, with the investors out there as well. I think we're going to have a good time. We got a dynamite team, a dynamic team, a diverse team, so it's going to be a winner.
God bless you, Mike. But getting back to your question, I'm sorry to interrupt. You asked what trade ideas we have. The key equities and holdings, and it's a jigsaw puzzle where every piece a different aspect of the picture, so that when it comes together, it's a Van Gogh ideally, or Monet, some very soft colors, but also some dark colors with the hedging, recognizing that stocks do go down. And so that's what I'm excited about, is that we have, whether it's VIX, volatility holdings, whether it's closed-end funds with minimal downside, whether it's high growth opportunities, whether it's emerging technologies, whether it's pure high dividend growth stocks. And I think, just as an example, Under Armour highlighted the fact that they're the new Nike. They're the growth machine that Nike was 10 to 20 years ago. And Nike has either lost their way, or Under Armour has just taken market share. And I believe that they only have 6% in international sales, where management wants 50% in international sales. So I see a lot of growth with Under Armour. And I know that on our option position sheet that we do have Under Armour, symbol UA, and we have a lot of high growth opportunities and a lot of other sectors that are the right place to be, whether it's refining stocks, whether it's high growth stocks, it's, as you mentioned before, ETJ that has limited downside. So it's really a combination of everything, and it simply is not going to be a Fidelity blue chip. That was possibly the position to take 40 years ago. But I think many of us have learned that stocks go down, that QE, that emerging markets are becoming stronger, that government is becoming a more prominent deciding factor in how stocks move. And, to me, I don't want the government deciding the future of my financial outcome. And there's plenty of people out there that are comfortable with that situation. But going through 2008 and seeing people who lost money, I know that there is ways to reduce financial losses and not have a fear for the markets.
Yes, I think that's a good breakdown of some of the upcoming trade ideas and some of the themes that run behind it. Also, we'll be looking through at least, watching what the whales do. A long time. We sit there and we'll watch what some of the bigger names do, and we'll sit and we'll watch the option markets and look for unusual trading patterns and see what develops. Looking for those unique situations, and when things don't seem right, and when they don't seem right, usually something's going on behind the scenes. We just got to figure out what that is.
And that's a great point that you bring up, Mike, because Leon Cooperman, Stevie Cohen, despite his ongoing legal investigation, they have some of the greatest ideas present. And although we will only identify the holdings that they have 45 days after the quarter, when they file their SEC filings, we can get an idea of what they are doing. And what I'm speaking of is, and why I get so excited, and why I'm so passionate about this, is the airlines they're in the dominant spot of making money. Whether it's Spirit Airlines, United, Delta, they're making money. There's limited capacity. I'm like, what are we going to do? You got to be in the names.
You have to. You really have to. Yeah, you can't sit on the sideline and just hope to get in at the top. You got to get in when the big guys get in and when you find the themes. Bingo.
Amen.
Amen.
There is a private group, just to be honest, and it's 100% exclusive of anything else we do. And the private group is more 100% portfolio management focused. And when I say that, Mike Ray and I and other folks that will be named and introduced on their own terms, we have a lot of great ideas in that. And the core concepts being that we use every tool at our usage and within everybody's brokerage accounts. And when I say that, if volatility is increasing, we want to potentially profit on that. Or if volatility, which over time tends to decrease, we want to profit on that. And so one of the core ideas that we use is volatility. And we have been using selling the volatility, and that has been the wrong side of the trade recently, but we do have protective puts to reduce the exposure. Now, the volatility is a fairly complicated topic compared to a Coca-Cola paying a dividend and good golly, Miss Molly, Warren Buffett owning, 10 million shares or whatever. But it allows us to own different asset classes, volatility, gold, currencies, and all with predefined risks before we enter the positions. And we do own plenty of closed-end funds, plenty of income producers, and we're very, we pay attention to the individual investor with specific ideas depending upon whether they're 22, they don't have a care in the world, they're riding around in a BMW convertible, playing Aerosmith, smiling, versus an 80-year-old who only has $100,000 in their bank account, and they need that money to supplement their Social Security and pay for their bills, and their rising healthcare costs, their heating oil, their prescription costs, and in many aspects, the world is a little bit out of control when people can't get their prescriptions, can't pay for their rent, can't pay for their heating oil because it just jacked up 30%. And that's reality. And so we want to help each person, whether it's the 22-year-old that's going to go buy, some medicine to build up their muscle mass versus somebody that's trying to pay their heating bill so they, don't freeze to death at night. And everybody's different. We work with them respectively, individually, and we have some common positions. No two people are the same. And Mike, you know that I stress that every single day. When we talk, when we meet, you and I are focused upon hedging the positions. Where are we and where are we going?
Yes, that is very true. The word is hedge, hedge, hedge. We don't do anything without some protection, and we want a plan. We're not gonna. Hope is not does not come into the equation.
Correct. And with saying that, and with the 10-year going down to 2.66 and possibly 2.45 after this Friday's earnings number, possibly lower. God bless Bill Gross and PIMCO, who would love to see a 1% 10-year. I'm not. I deal with facts, and I don't know where it's going. President Obama, the Federal Reserve, I love them. They don't respond to my emails. We all know that. I've said that to everybody that will listen.
Yes.
But, so we don't know the future. So we have to take action, be defensive, and by being defensive, we can be aggressive. By limiting our losses, we can be aggressive on our best ideas. And I think that's the key, that we're defensive and aggressive. I always refer to the 1985 Chicago Bears. You had the strongest defense over. That defense was dominant, period. Perry on the line, McMahon at quarterback, Peyton in the backfield, just a very well-rounded defense and offense. Dick on the sidelines. That's kind of how I want to position the portfolio. Not. You watch CNBC and every day they're telling us it's a buying opportunity, and I'm just not buying it. And I hope they're right. I don't think they'll come back on air if they were wrong, and I'll always admit my mistakes. I thought Apple was going to skyrocket this week, and it skyrocketed downwards. So it's financially embarrassing. What am I going to do? But so what I do, and this applies to Yahoo on the option side too, is you accept it. We have plenty of winners in a lot of other positions, and whether it's establishing a new position in Under Armour, symbol QIHU, Google, Priceline, whatever it may be, and also a lot of bearish positions. I expect the unexpected, and whether what if the planes hit God forbid, the Twin Towers, I don't even know if they're back up. But if they were back up, I don't want that happening. But if they were back up and something happened, we want to have hedges in place so that people are not wiped out of their financial worth. Money is the last thing that one should prioritize in their life. Family, friends, their loved ones, health are all the key issues. And unfortunately, money, pays bills, pays for lobster. And, if you don't have that, you got the food bank. And so hopefully we can, direct people to a restaurant versus a food bank. And that's my goal. The private group is family members on the members side of the fence, the people that I consider friends, and I've met plenty of them on DividendLab and through various sources. And they know what to expect. They know there's going to be losses. They know there's going to be gains. And at the end of the day, the gains will offset the losers. And just to highlight one example on the option side, well, let me go back to the equity side. On the equity side, we have a couple hundred shares in the DividendLab portfolio. I think we have 200 shares of Yahoo that was bought at lower prices. But I also adjusted the protective put to 38. Well, after the earnings release, stock went down to 35. Yeah, it jumped up to 36 on Friday because of the Alibaba news that hits the wires. But what I did with our 150 call position on the option side was I rotated that down, extended it out, and I sold the $36 call slightly out of the money to offset the cost. And we keep on doing that. We adjust and we hedge. And when a position no longer is a valid holding, then it hits a highway. I'm not going to hold Enron after I know it's a con stock. I'm not going to hold WorldCom hoping that it comes back from bankruptcy and fraud proceedings and hope that it returns to its glory days. We want to own the winners. Under Armour is better than Nike right now. Google is better than Yahoo right now. Yahoo has a better valuation because they own Alibaba. As soon as the Alibaba IPO announces, then Yahoo moves up. And if you're not positioned for that, then you're not going to take advantage of the position. Having said that, all these ideas, interest rates, currencies, the change in the Japanese yen is a big factor, especially when I short or go long the gold, silver, or any of the metals, or any of the gold positions. We did take on a new gold position specifically for management only, who is a proven winner and probably the biggest winner in the gold market of all time in terms of absolute dollars created for investors. And so it's adding these kind of ideas in every asset class that I can come up with. We're doing this day in, day out, talking to the people, and that's what the private group is about. I can't put that in context into a newsletter. For God's sakes, man, I've got people that'll cancel the newsletter when the stock market goes down, 1/4 of 1%. It's insanity. Some people don't realize that markets don't go straight up. And those are the people that will suffer because they don't learn the concept of hedging, selling covered calls. They don't want to put a new tool in their toolbox. And, I can talk till I'm blue in the face. So the private group, it's a little bit different because they understand that the market has changed. And anybody that doubts that, I have one site that I highly recommend everybody go to and share with anybody, usdebtclock.org, and that will show you that you're in the hole for probably 100,000 each person in your family, including your, God bless, 1-month-old son or daughter that has the cutest cheeks and the bluest eyes, but they owe 100,000. And college is probably going to cost them 400,000 that they can't repay because all the jobs are being sent over to China or Japan or Latin America. So having said that, we want to be offensive. We want to be sitting on the fence being opportunistic. And I'm just not simply, everything is perfect and, with a smile and looking like, George Clooney and not a care in the world. That's just not me. And the people that, that I hire, that I work with, that become partners, whether it's Alex, whether it's Mike Ray here, Mike Morton, and I'll let the other folks speak for themselves, but, they've all been through the ropes, 2008, 2000. They know what 1929 charts look like compared to today's charts. They know that the market has been manipulated upward via QE, and God bless Chairman Bernanke, who would now get $2.3 million for every speaking engagement. So having said that, the goal is really to make money, and that's what the private group is all about. We do have fun, and sometimes we get a little intense, and you're okay, Mike. You get excited, and I try to calm you down, but I try, but you're not there. You gotta learn to use a little,
little self-control.
Yeah,
I'll try.
Yeah, I'm teaching.
Okay.
But that's what the private group is about. Go on with.
I think let's let them break. I think for podcast one, I think that's pretty good.
Okay, and so folks, just God bless Mike Morton, who's standing in front of me, and I'm not kidding you when I say this. And folks, when you hear this, mark my words. If this is not the truth, when we start doing videocasts, Mike Morton is a spitting image of a love child between Matt Damon, but younger and more personable. Seriously, a love child between three males in one person, and with the IQ of Alex or some guy, from MIT. I couldn't even apply to get a, janitorial job at MIT, let alone, have the brain of Mike Morton. But and Mike Ray, once you all see some of the writings, and I know the private group has seen some of the writings and some of the money making ideas. Mike Ray has created some value with FFIV, Twitter. I won't go on to it, but Mike has some of the best writing skills I have ever seen, and I mean that. And I have third party. I'm privy to third party proof of that fact because I know who has contacted him to write for their site services and products. And both I consider great friends, and there's more people behind the scenes coming, but I just want you to know kind of what's going on and to mark my words that if there's a face built for a financial and along with the brains.
We will see, Todd. We will see about that.
Okay, well, God bless everybody, and if you're not religious, Darwin bless you, and thanks for everybody's participation. And we're going to have fun, make money, and learn. And if you don't want to hedge, if you don't want to do some of our ideas, use what works for you. Just keep in mind that we take this serious. And we're going to lose some money, but we're going to make some money, and it's having the confidence to learn, appreciation, diverse.
That's the end of our podcast. Of course, our lawyers are always very insistent that we go ahead and mention that you should go ahead and verify all claims and do your own research before investing in any security mentioned by DividendLab, us in the newsletter, or the podcast. Past performance does not indicative of future results. And, our newsletter is, you're just urged to consult with your own independent financial advisors with respect to any investment. Thank you, and we'll see you next week.